Hello traders, this is Rich Derrick from Tradesight.com. I just wanted to take an updated look at the 10-day Trin and take a look at what the current implications are for the overall market. We've recently registered again here up in this area and oversold reading in the 10-day Trin. That's when we get above the 1.35 threshold, which we've done on this recent push down in the market, which elevates the Trin. So right now we've got a condition where we have stocks in general being oversold and certainly not overbought at these levels. And I just wanted to take a look at what the implication is going to be for the broad market. So let's take a look at the 10-day Trin with the broad market stock laid over it, and we'll take a look at how that's lining up right now. So here's our same chart, the 10-day Trin, but I've just moved it up to the upper half of the graph here. And what we have down below is the S&P cash. You can see that the most recent touch we had before this was to the downside, which actually was an overbought reading. And at that point, the chart had broken out above the prior high, but in so doing, took the 10-day Trin down here to that overbought reading in the market of 0.85 in the Trin. You can see how once we got to that level in the Trin here, the advance in the broad market stopped and flattened off and went sideways. Now we've had this little corrective activity downward here in the overall S&P, but it hasn't really gone too far. And in fact, now we have this oversold reading in the Trin, which means that stocks actually have a bit of a bid underneath them because there's already been a fair amount of sustained selling pressure. So we have to have at least an average of 10 days here where the reading is 1.35 or greater, which we do have. And since we've had this sustained pressure in the market that caused this little bit of a break, now that we've had that for 10 days or more, now we're starting to get into that area. Well, you know, the market really has this little bit of a safety net underneath it because of this condition. Okay, so now here's a look at the same chart, but now we've got a trend channel applied to the move in the S&P. You can see it's a fairly sustainable angle of attack here. It's not 45 degrees or greater, which is what you usually find near the end of a move. Something that's becoming terminal where it's been accelerating too much. This one's fairly well sloped and has been fairly well organized. We had this little drop back here after things really started getting organized, where it's slightly below the channel, and you can see in this last push up here, it got a little bit ahead of itself and left the channel, and that's when we got this overbought reading here in the Trin. But again, now we're kind of back to the midpoint of this channel. We've got the oversold reading in the Trin, so that's going to kind of keep us glued here. So I would say at this point, unless there's some kind of a market shock, it seems like we're certainly going to be contained by the lower channel here if we do continue back lower again, because we do have this oversold condition. So we'll take a look at this again probably later on in the week or the beginning of next week to see how this develops. But for right now, we do have this mild oversold condition remaining in the market, which is going to provide a little bit of a footing here for the bulls. And again, this is Rich Derrick from Tradesight.com, and feel free to drop into the lab. You can take a free trial if you want to chat about this and learn a little bit more about how we use the 10-day Trin. Thanks for listening.